over the last few months that we have been chatting, sir, you for one have been a perennial bull, and I mean, to your credit, the the going has been great for our market. But and to my mind, I mean, I think there are two issues that has been plaguing India, India Inc. for the last couple of years. One is that rural markets are underperforming, and second is that the private capex now that is lagging. And I want to focus on issue 2 here, because I mean, if all of us are so gung-ho on the future prospects, why is the private sector not investing in capacity? I mean, are they waiting for demand to pick up, interest rate cycle to turn, elections to be over? What's your sense of things over here, sir?
Thank you, Suyash, for having me on the show, and morning to all of you all. So, firstly, to answer your question as far as rural demand is concerned, I think uh, last year, as we had discussed earlier, monsoon was erratic, and that has a significant impact as far as the semi-urban and rural India demand is concerned. Whether it is to do with discretionary spend or whether it is to do with FMCG spend. But our sense is that there are a lot of steps that the government has put in place to increase the income of semi-urban and rural India, especially large part of the population which is associated with agri activities. So uh, things over there will pick up over a period of time. And this year, according what the Met Department has said, that the impact is of El Nino is going to be a little bit lower, thereby expecting the first half of the monsoon to be in line with long-term averages. Second half could be a little bit of choppy depending upon how the El Nino impact develops in the high seas. So that will come back at some point of time. So that's the first part of your question. Second part, in respect to the private capex holding back with their investment, one primary reason is that you have a big event in the next maybe about 2.5 months in form of general election. And any corporate would want to have stability with respect to political environment. And at time when, all guns are fired up, government is taking all initiatives with respect to PLI scheme or giving encouragement for capex, uh, rolling out tax sops, etc., etc. So that will happen, but I think for private capex to pick up, general elections have to be done and dusted, and the result in place as per what the anticipation is. I hope if all this goes in the right direction, private capex should possibly start coming into effect from second half of this calendar year.
All right, but are there any signs that the private sector is coming back to the table, because the government has come out and said that they will borrow less this year. The focus is clearly on reducing the fiscal deficit. So I mean, a larger portion of credit is available for the private sector, sir.
So government will decide. See, government has spoken about it. Then this was a budget on account. You could not do much. The Honorable Finance Minister could not do much because of the code of conduct being in effect. And the Honorable Finance Minister and Honorable Prime Minister have spoken that post the election there will be a detailed budget that will be rolled out. So I guess over there you will see some changes happening. Yes, there are a lot of funds which are available for private companies to lap up, but they will only lap up when they see meaningful growth going forward from here on. And if you look at the domestic consumption as far as industrial commodities are concerned, I think that's going to pick up thick and thin as we go forward from here on. Even if you look at the recent capacity additions that some of these sectors have taken up, that augurs well as far as the future growth and demand is concerned.
Good morning, Gaurang. While private sector may be falling short on some accounts, unique investors and individual investors with respect to the National Stock Exchange have grown threefold in the last 5 years, and the last 1 crore seemed to 9 crores investors, and the last 1 crore seems to have come from just last 5 months. The daily unique registrations that averaged 47,000 in October has jumped to 78,000 in January. Uttar Pradesh and Maharashtra are leading this surge, with almost a quarter coming from these two states, and Gujarat has fallen to the third place. What do you make of this? Just digitization and performance of the markets, or confidence in the economy as well?
So I think, Amit, first one is the realization in terms of stock market being an asset class wherein if you have invested wisely for long term and if you have a little bit of elevated risk appetite, then this is going to be the asset class which is going to give you the best return. And even Association of Mutual Fund of India, AMFI, has said that amongst the common most 4 or 5 asset classes that a common person on the street has on his or her hand is, of course, best return is over a longer period is equity or mutual fund SIPs or lump sum investment. A good part about this number that you just mentioned is that most of the new accounts that have come in has come in below the threshold limit. That means tier 3, tier 4 and smaller cities is where large part of the population is wanting to become actively involved in the India's growth story. And my sense is that if we have a stable government post the outcome of election, then the trajectory is going to be stretched further on. And there'll be more and more individuals who would want to be associated with the India growth story and investing into either equity market directly with little bit of understanding and of course acceptance of high risk, high return kind of scenario. And along with that, mutual fund investment will also grow. This will possibly translate into lesser dependence as far as the FI sell side figures are concerned. We've already seen this in the recent past. FIs have sold lock, stock, and barrel, but the domestic institution had the liquidity power to face that selling pressure from the FIs. Had it not been there, we would have been possibly down and out like other emerging markets. But my sense is that this number is going to grow steadily and that will support the domestic institutions as well.
All right, the numbers are expected to grow steadily, and so you rightly pointed out it has been the local investors, both institutional and retail, that have been driving this rally, and certainly FIIs, I mean their activity, I mean that has pretty much taken a backstreet. But moving on, it's going to be a busy week for the primary markets. 3 IPOs will hit the street. Marketing services provider RK Swamy, Kolkata-based zinc oxide manufacturer JG Chemicals, and Rajkot-based snack maker Gopal Snacks. Between the 3, anything that you like?
Well, we have not covered either of them, so it will be difficult for me to comment, Suyash, but let me give a word of caution. And I think authorities have also raised a flag, not a red flag, but raised a flag with respect to the number of IPOs that are coming into the market and the kind of funds that are generated, and more importantly, due diligence in terms of valuation. So my humble request is to all the investors is don't look at all the IPOs with the single thumb rule that upon listing you will get 20, 30, 40, 50% return or maybe more. You have to differentiate between paper to paper, business to business, rate, and of course today you have got a lot of platforms wherein you can understand what that particular company is and how good or bad that company is. So do a little bit of rational thinking and then only take the plunge in terms of whether you want to invest or don't invest. I won't comment specific on these 3 names since we don't have a coverage, but one needs to be careful about business, management and valuation.